Day 113 of the second Trump administration, and boy, has it been a huge day in the world of money, power, politics. Earlier today, the U.S. and China announced a 90-day pause on most of their recent tariffs. The American tariffs on some Chinese imports will be cut from 145% down to 30%, and China cut down tariffs to about 10%. The latest agreement comes on the heels of weekend talks in Geneva. Treasury Secretary Scott Bessent and President Trump are optimistic. They say it will lead to more negotiations and a much bigger deal in the coming weeks, according to them. Watch this.
We achieved a total reset with China. The talks in Geneva were very friendly. The relationship is very good. We're not looking to hurt China. I'll speak to President Xi maybe at the end of the week.
No one wants to do a generalized decoupling, but we are going to do a strategic decoupling.
The temporary climb down brought a huge sigh of relief from Wall Street. The Dow jumped 1,100 points, while the Nasdaq and S&P were both up more than 3%. Retailers were equally happy to hear the news, but many say that even though this will likely mean a big surge in shipping over the weeks ahead, those higher prices, they're here to stay. So let's level set just for a moment. Okay. President Trump has argued for years that the United States has been taken advantage of. And just over a month ago, he launched a trade war that caused global economic panic. Well, tonight, all of us are breathing a huge sigh of relief that he took his foot off the gas. But let's make no mistake. He is the person who brought us to the brink. So what exactly happened today? As economist Justin Wolfers puts it, two things are true. One, U.S. trade policy and our macroeconomic prospects are much better today than they were yesterday. And number two, U.S. trade policy and our macroeconomic prospects are much worse today than they were Inauguration Day. Now, we should expect a massive shipping surge from U.S. companies that can afford to front-load inventory before this new 90-day pause runs out. But the remaining tariff cost will still be passed on to consumers, especially from smaller businesses with smaller margins that cannot afford to eat that cost. Now, today, it is a good day for business in China and the United States, and it is certainly a great day for markets. But the head-scratcher is President Donald John Trump, who he is and what exactly he wants. Because I want you to remember why exactly the administration launched this trade war and why they said we needed these tariffs to begin with.
Tariffs are tariffs, and they do raise revenues. They will. I see them as a tax cut, Andrew, because they're going to help pay for the biggest tax cut in American history.
So we can't be a nation that invents everything but has everything built somewhere else. Eventually, you become subservient to the people who build things for you. If you make nothing, but all you do is think about it, then someone else will be the builder.
You know, a lot of people like to talk about tariffs. Well, tariffs is exactly what they were doing for us. You know, when you want to defend that, they're a beautiful thing for us if you can use them, if you can get away with using them. It's going to make us very rich. We'll be paying off debt. We'll be lowering your taxes very substantially because so much money will be taken in that we'll be able to lower your taxes.
So does that mean we're headed back down to Howard Lutnick's lane of subservience? Now, the argument that these tariffs were going to pay down the deficit and pay for the tax cuts, I guess that is clearly not happening. Donald Trump's long-held beliefs that sweeping tariffs would reinvent U.S. manufacturing and reshape the global economy in a way that would make America great again, well, that is clearly off the table, not to mention inflation. It was one of the biggest drivers that helped Trump return to the Oval Office. And 30% tariffs and 10% around the world are still inflationary. So what exactly changed? Besides a jet from Qatar, promises for hotel developments, deals for Trump family documentaries, and some massive investments by foreign companies and entities in the president's crypto empire, from the sources that I speak to, it is unclear how any of this has made America great again. With that, let's bring in our leadoff panel tonight. Susan Glasser is here, staff writer for The New Yorker. Jonathan V. Last, editor at The Bulwark. Dan Nathan, CNBC contributor and host of the Risk Reversal podcast. And Charlotte Howard, executive editor and New York bureau chief for The Economist. Mr. Nathan, your reaction to all of this and where America's economy stands tonight.
Well, there's a big difference between what happened in the stock market today. The S&P 500, the largest index, was up more than 3%. This was a huge move.
Great news.
And you get great news for people who own stocks and the wealth effect that's created with that. On the flip side of that, I think you have to really separate what happened in the market today, and this goes to exactly what you said, and what's going on with the economy, right? If you think about these 145% tariffs that were put on China just a few weeks ago, they didn't really go into effect. They were there for a few weeks or so, and it did slow the global economy. It did slow, a whole host of importing to this country, and that's going to slow down a whole host of other activities. When you think about the Port of Los Angeles, the director of that port today said that they don't see a meaningful uptick in activity going into that port because you still have all this uncertainty about a 30% tax that importers have to either pass through to consumers or eat a bunch of it. And so you're really going to see some slow activity for the next couple months. And think about this. We just got a 90-day reprieve. You might not see a whole heck of a lot of activity until we get more clarity in 3 months.
You know what's going to get eaten? Small businesses. Because big businesses who can handle a complicated, sophisticated supply chain, businesses that could front load their inventory, they'll be fine. And they will eat they will eat small businesses across this country. Charlotte, where does America stand in the global economy now compared to before Liberation Day?
I think it's worth going even further back, even to October and November, right? We had a cover in The Economist that had America explains as the economy that was the envy of the rich world, outperforming every other economy in the G7.
That was in October.
Yeah, that was in October. And then you had, of course, what we've seen in the past month and a half, where you have the value of the dollar dropping, huge losses in the S&P. And I agree with you that, it's hard to see what the point of this was. What was it for? So we have a resurgence in the market. We have companies, however, that continue to face this uncertainty. I think it's big companies as well as small companies. Mm-hmm. Yes, big companies will weather it better than the small ones. But, they're not going to be hiring thousands of workers. They're not going to be making big announcements of capital expenditures. So, it is hard to see exactly what the point of all this was.
Jonathan, whether it's the deal with UK or the progress with China, what have Americans gained and what have they learned about the president?
They've gained nothing. They've lost quite a bit. And what does it say about what's going on with the American government, where you get huge movement in the stock market, the first real positive signs of life, the day the president gets pantsed by the Chinese? Right? It means that the American financial markets are rooting for the U.S. government to lose its negotiations, right? And I don't know. It's nice to see the stock market going up because people realize that they can make a little money on arbitrage, right on the good news. But the bond market is still, the yields are high, way up, which is scary because that's where risk goes to hide. And then you look around the rest of the world, you look at the indexes in Germany and in Japan and China, they're all doing okay. Really, the rest of the world is doing okay. It's just America. And it's like a man-made natural disaster.
And that man is named Donald Trump. And let's be clear, until we actually address our fiscal cliff and our debt and deficit issues, the bond market will remain the daddy. Susan, here's my question. Where's Peter Navarro tonight? Where's Donald Trump tonight? Because this move does not line up with any of Trump's stated goals as it relates to trade, does it?
You mean you haven't got your check yet for all the lower taxes that you're going to be getting as a result of the massive shift of the global economy and all the manufacturing coming back to the United States in just the last month? Because global companies, of course, can immediately shift their large factory productions into the United States because Donald Trump asked them to just a month ago. No, the absurdity of all of this is really underscored by the idea that there's a global sigh of relief at a 30% tariff on goods from China. This is, the two most important economies in the world. If you said a year ago or 6 months ago, to Charlotte's point about, the Economist coverage here, if you said 6 months ago, we're going to take a 30% tariff on goods from China, what would that do? The stock market would crater. People would panic, an enormous crisis in our economy. And so once again, we have Trump kind of playing by the Trump playbook, which is put something so outrageous out there that people breathe a sigh of relief when some other thing that is actually quite disruptive and outrageous happens, but it's not quite as outrageous and disruptive as the thing that he threatened you with. It's amazing to me that this trick works for him again and again and again, but we are where we are.
Okay, but businesses are already saying that higher prices are here to stay. Is that because of the 30%?
Yeah, it goes back to the uncertainty, right? And I think your point about small business is really important. They are 2/3 of the hiring here in the U.S. And when you have a small business that can't deal with the uncertainty, they can't deal with this increased tax, and they are not able to eat the difference that comes in, from a 30% tariff, right? And so it's really hard also for them to pass through those costs. Let's just think if you're a small retailer, right? And you are competing with Amazon or Walmart, who have so much leverage, right, over their partners, their manufacturing partners and the like. Once those small businesses go out of business, they don't come back, right? And so I think that's a really important kind of thing. If you are really a populist sort of, this guy who just really wants to, do what he can do for those sorts of people. That's what got him elected. This is the sort of thing that I think could really change the tide. If you look at some of his approval ratings, it's going down. I don't expect that to change too much because a lot of the folks that he's supposedly trying to help by bringing manufacturing back, they're really not that exposed to the stock market. But one of the most important things is that the stock market might have rallied. The U.S. dollar rallied today. But you know what also went up? U.S. Treasury yields. And it's at 4.7% right now, 4.47%. When we got to 4.6% about a month ago, that's the thing that made the administration blink. So if we are there again above 4.6%, what happens there? I suspect the stock market starts going lower because you're going to hear a lot of these CEOs really worried again about all of this uncertainty with trade. And, we've said this again and again. The first time the Trump administration in 2018 slapped tariffs on China, it took them nearly 2 years to get to a phase 1 deal. So I wouldn't be holding your breath to have some real formative sort of deal anytime soon.